This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christie. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index currently trading at above 47,100. Bitcoin is slightly down about 1% over the past 24 hours, so trading pretty flat for as much as Bitcoin goes.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Here's a chart of Bitcoin transactions over the past 20 months. At times, Bitcoin transaction fees are relatively cheap, less than about 5 cents per transaction. But CoinDesk analyst George Kalidis writing that when the Bitcoin mempool becomes congested, transaction fees can spike substantially, making casual transactions less viable at the base layer. And we can see that happening at about May of this year, just after Bitcoin hit all-time highs around $65,000. A lot of people were using the network. Bitcoin was introduced as a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. In the early days, it was exactly that, but it was also being used by a small group of people. 12 years and 100 million users later, Bitcoin is prohibitively expensive for casual transactions and only capable of confirming up to roughly 7 transactions per second. As such, the Bitcoin narrative shed the electronic cash use case in recent years and replaced it with store of value and digital savings technology use cases, likening it to a type of digital gold. But that does not mean the dream of Bitcoin as a peer-to-peer version of electronic cash has died out. And joining me to discuss all things Bitcoin is our Week in Review panel, CoinDesk research analyst George Kalidis in North Carolina and CoinDesk markets reporter Dominic Dantes in New York. Welcome, George.
Hey, Christine.
Hey, good to have you on. All right, so George, the dream of using Bitcoin for electronic cash payments has not died out. You published a research report on the Lightning Network this week, so perhaps you can shed some light on what the Lightning Network is and some of the highlights of your report.
Yeah, so like you said, transaction fees in Bitcoin sometimes get really, really high, and it really isn't the idea of it being high a certain amount of times. It's just the unpredictability of it. And a lot of people were focusing on El Salvador, who recently made Bitcoin legal tender in the country. And the first bit of criticism was, okay, Bitcoin is way too expensive to be used for buying coffee because transaction fees are high, which is not always the case, but it is sometimes the case. And the other criticism was, oh, they can only do 7 transactions per second, which would then really not only allow people within the country to actually transact on top of Bitcoin. So, of course, El Salvador didn't go into this without having a way to actually transact on Bitcoin. And the way to do that is there's a second layer to the Bitcoin network called the Lightning Network. And I've been on this show a couple of times to talk about it. And really what it does is just allow for cheap, fast transactions on top of Bitcoin. At the moment, the reason that I wrote the report was that in a way, it is not perfect yet, right? The developers in the Lightning Network are working on it day in, day out because there are still vulnerabilities and there are still some nuances that need to be worked out. So it's working so far in El Salvador, it seems, with boots on the ground. So it's great to see.
And of course, so we're showing this chart on Lightning Network capacity. Maybe you can go through what we're seeing here.
Yeah, so the way that the Lightning Network is powered is 2 parties who operate a node, which is a computer that upholds the rules of the Bitcoin network. They have to commit Bitcoin to channels, and through those channels, people are able to push transactions through. Now, the more Bitcoin that's committed to the network, the more transaction throughput that can actually happen. Now, it isn't a one-time thing, right? If I put 1 Bitcoin in, it doesn't mean that I can only do 1 Bitcoin's worth of transactions. What it does is we're building a network of nodes that commit Bitcoin to allow transactions to flow through it. So we're seeing a crazy growth in the past 6 months, really this year. And we exceeded 2,400 Bitcoin sometime in early September. And that's great. But to a certain degree, it's still somewhat of a hobbyist network, right? You're not hearing of, Visa implementing this everywhere. So it's still a work in progress. It's still something that's growing.
We also have a chart on Lightning nodes with channels that we can bring up, but perhaps you could go through the differences between what nodes and channels are.
Yeah, so there's a big caveat to say here as well, is that there's a modifier at the beginning of this that says public Lightning nodes with channels. And the cool thing about the Lightning Network is when I create a node to put on the network, I can either announce myself to the network, or I can have my own little payment network on the side. So this chart shows up and to the right, a lot of growth the past 6 months, but these nodes are only the ones that have publicly announced. So the difference between a node and a channel is a node is one individual or a group of individuals that are running a computer that runs the rules of Bitcoin and the Lightning Network. And a channel is a relationship between one node and another node where Bitcoin is committed so that you can push transactions through.
Okay, great. Let's shift over to some price analysis. Dominic, we've seen Bitcoin basically consolidate at the $46,000 level. It seems to be hitting that $50,000 resistance. What is your insight and analysis of what Bitcoin has been up to this past week?
Yeah, it's definitely taking a breather. On Monday we had that head fake, the fake news out of Walmart and Litecoin, and I think that kind of jolted the price up a bit to that 50K resistance level. It was very short-lived. We came right back down, and now it's kind of taken a breather. So, the previous 2 weeks have been pretty good, but then the previous week we had that sell-off, and then now, I think buyers and sellers are kind of just reconciling, and they're kind of at a stalemate. We are holding around the 200-day moving average, which is around 45K, but we're still in breakout mode above 42K. And I think a lot has to go towards next week's options expiry, which I think will be the telltale sign of where we're going to go next. But for now, taking a breather into the weekend, and volatility has drifted back a little bit lower. And this is all after the fact, after that sharp sell-off that we saw 2 weeks ago.
Mm-hmm. I've also been reading a lot about signs of institutional interest in Bitcoin. What can you tell us about that data?
Yeah, it's hard to confirm that, but we've seen on transaction data, it's been very large over the past few weeks. So it's showing a lot of large buyers have been active. Glassnode has some data showing that there was a large accumulation for large holders around the 42 breakout level. So that's pretty good. It shows that sort of bear market that we've kind of had has kind of waned itself as momentum has materialized to the upside. So that's pretty constructive. And I think that that supports a lot of the buying action that we've been seeing on pullbacks. So pullbacks have been brief, but rather sharp. And, the positioning data has been pretty strong. So that shows that the large buyers are still pretty active within Bitcoin.
Mm-hmm. Also, big news this week, El Salvador, there are protests against Bitcoin. Yeah. Seemingly, though, they are more about political protests against the president of El Salvador, Nayib Bukele, because a lot of these people may not be very knowledgeable about Bitcoin, but they're protesting it because Nayib Bukele brought in this Bitcoin law, accepting Bitcoin as legal tender in the country. But it has proven to be quite controversial. But I wonder, Dominic, has this had any impact? Has El Salvador had any impact on price? And we're also seeing Ukraine attempting to adopt Bitcoin as legal tender as well. As we see these emerging markets adopt Bitcoin, is that having an impact on price at all?
It hasn't. The announcement hasn't really moved the needle as much. I know there's been a lot of fierce opposition, I think, regarding the constitutionality of the law. So a lot of folks in El Salvador are fighting up against that. And there's been a lot of, the human rights organization coming through. And I think it's just circumventing, some of the belief on the ground. Not too sure about the politics of that, but the market impact has been fairly light. And I think it goes to George's point earlier about payment transactions versus the store of value. And I think we've been seeing more of the action around the store of value feature of Bitcoin. And I think that that's going to drive a lot of the price action going forward.
George, let's talk about the Lightning Network in the context of El Salvador. And you touched upon this in the beginning already. But the idea is to have El Salvadorans use Bitcoin as payments. And how is that process being rolled out right now. Are we seeing more user activity of Bitcoin through the Lightning Network?
Yeah, as far as the news that's been coming out, Salvadorans have been using Bitcoin, right? And you see stories here and there on Twitter of, XYZ coffee stand woman getting tipped randomly by Bitcoin advocates on the internet. So there are people using it. There have been a lot of growing pains with the Chivo wallet that is being implemented, which is the government's attempt at a Bitcoin wallet. But there were, based on my research, I've seen a lot of Bitcoiners, specifically Alex Gladstein, was up in El Salvador for a little bit, and he was documenting himself paying with both the Chivo app and paying with popular Lightning-enabled wallets like the Moon wallet. So there are people that are definitely implementing it there and using it there. A lot of the criticism I think that I've been hearing is the fact that it is a forced legal tender law, and the strongest of libertarians definitely oppose something of you have to use this. So in a way, it's a couple steps forward and maybe a step back in terms of enforceability of it. So not surprising that there's a little bit of pushback there, but it's being used.
I'm looking at regarding your charts on growing use or growing nodes, growing channels. Is that at all correlated with growing activity on the Lightning Network?
Yeah, so in a way, yes, you would like to think. Unfortunately, or fortunately, depending who you ask, a little bit of the transaction volume that flows through the Lightning Network is pretty private, and it's actually kind of difficult to pull that data. Now, there are really, really big node operators, like payment processors and merchant services that provide their transaction throughput at a periodic basis. But in terms of how many transactions are actually flowing through, it's not really easy to tell. Now, if you're spinning up 1,000 Lightning nodes every couple of days, of course, that means that something must be happening. So I can't point you to a particular number and what's happening, but there's definitely a growing amount of nodes out there, which probably means there are transactions that are being done. It also does point to the fact that, and I've had discussion with some developers, and they seem to point that the Lightning Network itself is somewhat of a hobbyist network, right? People who really, really love Bitcoin are the ones who are spinning up these nodes, and people who really want to support the network are the ones that are doing it now. So while they might have channels, they might be putting transactions through, it's not exactly, Starbucks, every single location is spinning up a node, right?
Mm-hmm. Interesting. Yeah, I've always wondered about that, whether or not we could monitor user activity, but it seems that it is very opaque and potentially for privacy reasons that will continue. All right, looking ahead to next week, Dominic, do you see Bitcoin breaking the 50,000 resistance level? And you touched upon this about the options expiry. What kind of puts, what kind of calls, and what strike prices are people positioning themselves? And does that indicate a more bullish sentiment or a bearish sentiment?
It indicates a more bullish sentiment. So we have about 200 million of Bitcoin coming up for expiry next week. On Friday, calls outweigh the puts, and the most active strike is at 50K resistance level. So there's been a lot of optimism within the options market around that level, but it depends on the expiry price, and whether or not those folks will be into profit at the expiration date. So we'll see. I think a lot of today's market wrap just shows a lot of the uncertainty that's embedded in the market. Even though you have the calls outweighing the puts, we've been seeing the volatility come back down. There's been a range-bound price movement. So there seems to be some pent up, sort of buying and selling stalemate in a way. So we'll see. I think we'll continue to consolidate here, and the bias is towards the upside, and pullbacks seem to be well supported. So the 50K level, everyone's on watch for that on Friday.
Mm-hmm. And any regulatory headwinds? We're reading that the U.S. Treasury Department is preparing a report on stablecoins and their potential risks to the financial system for a presidential working group. And Texas and New Jersey are piling on crypto lender Celsius. The company is being hit with 2 securities actions in one day to cease and desist their yield product, which allows users to earn interest on crypto deposits. Will this inject volatility into the crypto markets at all?
I think so. That's been an ongoing theme. And every time I write the market wrap, there's some type of regulatory announcement to cover. And, you speak to analysts.
There's also China, which you've written about.
There's China too. Yeah, exactly. It's all around the world. It's not just a U.S. problem. And anytime I speak to analysts who are slightly bullish, they always talk about the regulatory headwinds that keeps them from positioning a little bit more across their crypto portfolio. So I think that's a headwind in itself. And when you talked about institutional players earlier, we've got advisors, institutions come in all shapes and sizes, hedge funds. And a lot of these folks have a fiduciary duty to their clients. And, they have to sort of safeguard themselves about compliance risk. And one of those risks is regulatory risk. And I think that keeps the sort of schedule down the line in terms of ETF approvals and all this stuff. So there's a lot to be worked on the regulatory level, and we'll keep watch on that.
Dominic, I've been reading a lot about Evergrande, the embattled Chinese developer, and how that might have an impact on the crypto markets. I wonder if you could touch a bit upon that.
So I noticed Tether said that they are not exposed to Evergrande bonds, and there's been some debate over whether or not money has been flowing into that via crypto. I'm not too sure, and I think that's it has caused some of the weakness in Chinese equities. So it's caused some sort of a risk-off move. But there are various reasons for risk-off moves across traditional markets, and we've been watching that closely. I don't think that's a big headwind for now, but it's something I'm watching closely just from a broader risk-on, risk-off perspective. We don't want the spillovers to occur in the debt markets.
And quickly, just 30 seconds, George, anything that you're monitoring you want to mention for next week?
Yeah, I'm not much of a price guy, but I actually am going to be looking at the price. It's been kind of boring, just kind of floating around this band. But I also am keeping my eye out on the exchange outflows, right? If we're talking about these big institutional buyers, are they doing it? And if there's exchange outflows, are they putting it somewhere in cold storage for a long time? So that's what I'm looking out for.
Awesome. Thank you, George. Thank you, Dominic. Have a great weekend. Happy Friday. That was our CoinDesk Weekend Review panel with research analyst George Kaludis, as well as markets reporter Dominic Dantes. That's it for All About Bitcoin. I'm your host, Christie Lee, and we'll do it all over again on Monday at 3 p.m. Also join us Monday morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.